Well, having separated from Barclays PLC and rebranded across South Africa and parts of the continent, ABSA has still enjoyed an uptick in revenue in the first half of its earnings report. But can the bank succeed in Africa without its former owners? Well, my colleague Arabile Gumede sat down with the CEO, Maria Ramos, for this and more.
Maria, it's been a tough trading environment, not just for banking sector, but South Africa as a whole. But you managed to keep your revenue going up and, even in the environment we're living in with low growth in the country. How have you managed to do that?
The environment is a little challenging for all of us, but we have maintained our focus. And we said right at the beginning of the year when we presented our full year results in March and our new strategy that we were going to stay focused on three things. One was to deliver the numbers for this year, and I think the half-year numbers show us that. The second is we have a new strategy, which is about growth and returns. And I hope that what we see and what investors and all our stakeholders will see in the half numbers is that we show some of that momentum from a low base, no doubt, but solid momentum. And the other is the separation from Barclays, as this is the first set of results where we are fully, really our own business with a new and reinvigorated brand, and which we're very excited about.
At the same time, you've managed to keep expenses only rising by 4% in this environment, which is, of course, the same mark as inflation across most territories. How do you keep that going as well?
Well, we've had quite a good track record over a number of years now of looking at expenses, and this year has been no different. So you'll have seen us talking about, in these results, we talk a lot about normalizing. We've got a huge payment from Barclays, 12.6 billion rand, which is about what we're doing to separate from Barclays. So that covers those expenses. So the rest of our business is about making sure that we are spending efficiently and on the right things. And you'll see a lot of our expense focus is really about our platforms, our real estate, which is becoming smarter and more efficient. And I hope our customers are beginning to enjoy that. We're investing in the right things in digital. And you'll have seen us come out with WhatsApp banking and with Samsung Pay in the last couple of weeks, actually last week. So we've been first to market on that, and I said we would be, and digital is important for us. And I think also we want to make sure that where we are making investments, those are efficient. So real focus on costs, but we're also focusing on revenue growth, and so the two go together.
In that aspect, then, innovation, technology, and the investment in it, as you mentioned, is really, really big. How do you ensure you keep being first to market? Because that will really relay onto customer service and how customers continue to integrate with yourselves.
Well, when we talked about the strategy in March, we said we want to be digitally led and we want digital at scale. And that's really fundamental to our new strategy. So there is a huge amount of energy in our organization, all the way from what we've done with our brand, and you'll see our brand is very digitally focused. It's new, it's fresh, but it's digital. And it was designed for digital, to the way we're energizing our organization. And so we're not always going to be first on everything, but we are going to be giving it a really very, very big shot. And it's not just in South Africa. You'll have seen in what I said in my speech today, that in places like Kenya, which is our largest market outside South Africa, we also driving digital transformation. And it's not digital for the sake of digital. It's digital to serve our customers. So we're driving, we are actually being led by where customers want to go. There's a lot of digital stuff you can do, but it's about digital to serve customers. And so, for example, in Kenya, Tamiza is about responding to particular customer needs. WhatsApp banking is about tapping into a much more fast-moving market and a younger market, hopefully. Although I have to say, having logged on to and switched on to WhatsApp banking myself. It's fantastic. So,
Sure.
And I'm not in your age group.
Talk to us very briefly about IFRS 9 and that impact. The change in how you've had to now account for impairments. How exactly has that affected your business?
So the thing to say about IFRS 9 is it's an accounting treatment. It's something we've all been working on. And I say all of us in the financial sector. It's a project we've been working on for 4 years. It's a change in accounting treatment, and it covers a number of component parts. But where it's had the biggest impact, I suppose, is the way we're treating impairments. So in the way we think about impairments. So I'll just deal with that for a moment. And it moves us away from the way we've treated impairments in the past, from incurred losses to expected losses. So we have to think about impairments in that way, and also we have to think about that in different stages. So the old language of non-performing loans, all of that goes away, and we have to think about the way, once we've written a loan, the way that loan is likely to perform over its lifetime. And when the loan comes onto the book, stage 1, stage 2, how that loan is likely to perform, and eventually if the loan, to put it colloquially, goes bad and goes into stage 3. So we think about it from having incurred a loss to the expected loss to be incurred over the lifetime of the loan. And the accounting treatment therefore has changed. And that change, the accounting treatment came into effect on the 1st of January this year. And we've had to take that treatment into consideration. But fundamentally, whether we were using the old treatment or this treatment, I think the important thing to remember is that we are an organization with very strong capital, very strong liquidity, and the treatment of the accounting treatment doesn't actually change the way we have performed or our profitability over time.